Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin is currently trading at 29,823, down 1.44%. Ethereum currently trading at 1792, up 2.02%. Let's have a look at the Ethereum tokens. Nice to see some green in the market. I'd just like to let you know, if you're new here, everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to be more of a financial blessing to yourself and those you love. We've covered off Rule 664 in previous episodes, but there's so many ways that these rules apply. Unearned is returned. It's really important to put the hard work in to acquire your skills. They say that it takes around 10,000 hours to become an expert in anything. It's all about putting in the effort. If you sit back and you want to do the easy money path to riches, get rich quick, that is unearned. It will be returned and then plus some. It's really important to understand this particular rule. It can save you a lot of money. Sophocles said it really well. Success is dependent on effort. And of course, putting effort into things that raise other people up, when you have a plan to be a blessing to yourself and those you love, that's a beautiful focus. That's a good positive effort. Everything is rewarded in this world. The law of karma is about what you give is what you get. It's really important to earn things legitimately. We have a particularly intelligent scammer who's imitating my style as well as ripping off the name. These are fake accounts. If you want to see what is fake, the first thing is it will not be highlighted. This is my account. That account has always got a highlight. Fake accounts do not have one. Then you can actually drill into that account. You can see on the about when that person joined. If they joined, for example, today, that's not a really good thing. We've been doing these videos for a little while. And then if you look at the home, often the channels don't have any content. If a message says, contact somebody else on some other channel, you already know it's not real. It's not me. You can reach out to me anytime by direct message. I love to hear from the community. For the scammers out there, I do understand you're in a position where you don't think you have a choice, but the outcome of what you're doing is probably not the best. If you can get out of it, get away from it, I think it would be better than being targeted and of course being arrested. I've seen a lot of comments in the community and direct messages to me to explain what possible crypto price action would be. Let's have a look. Let's run the numbers on that. We already know from previous episodes that we always go with the prevailing trend. Of course, the prevailing trend in Bitcoin, as it has only 21 million Bitcoin that will ever be in existence, is up. It's a scarce asset. It's being adopted globally, which will push the price up year on year on year on year. When we look back through the KS model, which is based on institutional price psychology, we compare the bear market here to the bear market here to the bear market here. Bear markets come after a blow off top. We don't see any blow off tops here. This is not a blow off top. This is almost consolidation at a top level, but not a blow off top. When we look at the bull market psychology, the sunshine, we compare sunshine to sunshine to sunshine. The bear market can be thought of as a dark time when the prevailing behavior is negative. The psychological mindset is very negative. The sunshine in the bull market compared to the sunshine in the bull market compared to the sunshine in the bull market. I've taken all this price action and reflected it in here. Let's drill into that to see what's going on. Here we go. So what I've done is to put the 2012 halving cycle price action normalized to the 2016 halving cycle across here in blue. You can see the green area here, the green bars. That's the 2016 halving cycle price behavior. You will notice here that crypto is incredibly volatile. Can you imagine if we were in the particular 2012 halving cycle, the price came up to literally $265,000, then plummeted back to $46,000. Can you imagine holding through that? I've been with many of the community members on this journey, just helping them through by private message and chatting with them. They have a lot of problems here. Can you imagine problems like this? They're terrifying. What about this? Look at this big drop from around 120,000 in terms of the current cycle down here to about, say, 75,000. That's a really substantial wick down, but then it wicked back up. You can see this exponential blow off top. That is what we're looking for. When we get those exponential blow off tops, that's when we start to consider if the peak is in. We've seen a very wimpy behavior. This is really not a blow off top, not even close to the price action that we require. I think it's really important to understand that on this channel we can trade through bear markets, bull markets, and consolidation with equal ease. I've seen a lot of channels literally only coming online when the price goes up. Wow, what a way to live. No, we don't do that. We have expertise for all three particular segments of each halving cycle. It's no problem. If we're in a bear market, I would simply call it out. I've done some estimations for you. I believe, through my calculations, that the bear market low that will occur years from now will be between 43,320 to 72,900. I also believe that the mathematically sensible minimum all-time high could be no less than $132,418 in this particular bull market. Now, what does that mean? If you've seen past episodes, you will understand that these previous all-time highs are mathematically protected. That means that this line, price action, if it was to reduce by 85%, which is on average reduction in bear markets, couldn't violate this line. That's what sets up that 132,418. I believe this is in no way likely. I believe that 288,000 to 486,000 is the probable range. Okay, just to explain a little bit more in case there's any confusion, and I know this stuff can be very confusing. If we look at this line is, maybe I need to draw that back to here so it doesn't give out some kind of concept that could be the high. The concept that the 132,000 is right here at the end of the bull market phase, not here, just here. Just trying to give you an understanding that when we get to 132,000, that's literally the mathematical low that could be experienced. People talking about $100,000 Bitcoin at the end of the bull market do not understand the mathematics of Bitcoin. I'm really sorry to say that. They don't understand that this previous all-time high is mathematically protected. $100,000 would cause the price to fall below 19,666 by quite a margin. That's just not on. We've never seen that. We have to go with the trend. Just as I am saying, I've extended these forward, the bear market lows, 43,320 and 72,900, to give you an idea about if you're looking at price now. I believe with very much below the bear market low, it's a fairly safe time to buy. If we get a black swan event, yes, absolutely, that could penetrate the mathematically protected all-time high. And part of this is to look for those things. Part of this series, looking at the trend, is to look for those things. But I don't anticipate it. We don't concern ourselves with black swan events. They'll happen when they happen. We just react then. The most important thing, by the end of the bull market cycle, we would anticipate a price in this particular range. Quite personally, I believe it will exceed it, go above 500,000, but I would prefer to be conservative and give you a range that you can potentially target. For the 2012 halving cycle, which basically ended 367 days from the start, what happened was that this particular cycle ran this particular amount of time, but the 2016 halving cycle, when people were inside that cycle, they thought that the 2012 cycle would just repeat in the 2016 cycle. Instead, it lasted, you can see this gap between here and here, it lasted 43% longer than anticipated. I'm just using that standard 43%, and it really depends on a wide range of factors. As we get closer, I'll be adjusting this. But if we take 43% as a reasonable probability, if the 2012 halving cycle lasts 43% longer than the 2016, we would be out here around the 25th of May 2022. I hope that explains the difference. We've got one line here for when the 2012 cycle finished. We've got one line down here for when the 2016 halving cycle finished. And we've got an estimate on when the 2020 halving cycle could finish in terms of the bull market run. I hope that helps. You would have seen a lot of commentators saying that around the end or the mid of October, they expect the bull market to finish. They've simply taken the 2016 cycle and said that's going to happen, but they've not referenced back to the 2012 halving cycle to apply it to the 2020 halving cycle. They haven't accounted for the 43%. I hope that helps to sort of clarify things a little bit. So from the model, you can see that we're really close to around this area. Let's just zoom in there and see what happened there. This was brought up in episode 129. If you would like to go back then, I actually do a lot more explanation. The concept is that there was a line that was held, much like the line that's being held around the $30,000 mark. Then there was a wick down where every person thought it was going to collapse. I didn't. I believed it was going to keep on going, but that's because of price action. What happened was that it wicked down and came back up 60.55% in 3 days. Can you imagine if that happened right now? This is the behavior of Bitcoin. When price finally got above this previous all-time high, look at what it did. It went up and up and up, and then look at this wick. It wicked down, and this is very common behavior to touch. It's almost like it felt the previous all-time high, got happy again, and then went on its merry way. We always talk on this channel about buying the falling knife. There are a lot of people that say that's bad advice. Those people do not understand institutional price psychology. If something tails down, it goes, for example, it's not applicable to this, but it goes from 10 to 5 and then goes from 5 to 10. Falling from 10 to 5 is a 50% reduction. Going from 5 back to 10 is a 100% reduction. Buying these wicks is a perfect time to dollar cost average. That is the way that you can look at how to dollar cost average in. And it's what very, very few people would do. When the markets are red, they tend to run for the hills. And that's understandable. When you become more seasoned, more hardened, more institutional in your thinking, you'll actually get excited when the markets are highly red. They're the best buying opportunities. Okay, rule 171. Let's zoom out. We like to look at case Bitcoin to understand the relative returns across many different years of Bitcoin, gold, the S&P 500. We can see that Bitcoin has been doing very well year on year on year. When we look at the CAGR, the compound annual growth rate, that is what a particular thing is growing at from one year to the next. For example, the S&P grew over 1 year, 32%, over 2 years, 20% per year, year on year, over 3 years, 16%, first year, second year, third year. It's a compounding. If we look down to Bitcoin, we can see over the past 10 years, it's done very well. Gold, 1%, S&P 500, 12%. We can see that the return on Bitcoin is very, very good. And we understand what that technology actually represents. A lot of people on different channels, they don't know what Bitcoin really is. Bitcoin is a technology and the foundation for the next internet revolution, the internet of value. There's a bit of a roaring debate between gold and Bitcoin. I can understand it. Coming from a gold background, gold trading, I love gold. Gold is awesome. Gold is very good in times of great uncertainty. However, the returns on gold are not the best, and any gold investor knows that anyway. We have to almost wait for an economy to tank to see gold go up, or a war to break out, or a pandemic. It's always very negative. That's actually probably why I do so well in bear markets, because gold is a favorite of mine. But, however, we look at Bitcoin versus gold. Gold, if you traded on a ETF through a instrument, a derivative, you often don't have the rights to claim physical gold. When you buy Bitcoin, you're buying something that has a finite supply. It's mathematically curtailed. It has an upper limit, 21 million Bitcoin. And of course, some of those have already been lost. Estimates are around 4 million Bitcoin have been lost, which makes all the rest more valuable, not less valuable. So the concept is gold is really hard to move. It's hard to store. You have to organize for it to be put in a mint. You have to pay all sorts of exorbitant fees. Gold is really, really expensive. Bitcoin you can pick up for a song. There is always a fight between the gold community and the Bitcoin community. There really doesn't need to be one. There is always a place for gold, and there is always a place for Bitcoin and stocks. They all exist in harmony. Yet I know a lot of people want only their particular thing to thrive. That's a little unbalanced. Everything has a place in this world. If we look at the technological adoption curve for the internet, it grew exponentially. This is a log graph. If we look, this is the total internet users by time. If we look at the next evolution of the internet of value, this is the total number of crypto users. It's growing at an incredible rate. We've done many, many series on this, many episodes devoted to talking about this. If you would like to watch past episodes, there's a wealth of information, and I always cover off new rules and new ways of thinking, always with the concept of increasing your skills and transferring my knowledge. There's a really interesting statistic, the number of blockchain wallet users worldwide from 2011 to 2021. It's currently around the 74.74 million mark. If we think about what that actually means, when we have a wallet, it means that we can store digital currency on it, transfer it, and use it, basically. If we look from 2005 to 2019, this is the number of internet users worldwide. You can see this increase, growing. Now this is 2019. I'll show you in a minute what 2021 is. The concept, again, just to be conservative, is to show that the number of blockchain wallets is so low. You can imagine that every single person connected to the internet will eventually have a wallet. See this growth here. We've got a long way to go. I was just explaining 3.969 billion users on the internet. How is it going today? 4.66 billion, and actually that's not today, that's January 2021. Okay, it just goes to show you there's been a lot of growth. So a little question for you. How many years from now do you expect people to have digital wallets? If they have an internet connection, how many years from now do you think it will take for them to also have a digital wallet? Just maybe pop your answer in the comments. I'd be really interested to hear your view. And for people, I know there's a lot of younger people watching. And when I say younger, I'm over 50, right? So my definition of young is maybe under 30. I don't know. But was the internet always here? This is a really interesting question. If you're around my age, you may have a different answer, but what do you think? You might like to comment on this one. Was the internet always here? The other way of looking at it is, what would you do if the internet wasn't here now? It doesn't matter what age you are. That's a really cool question as well. What would you do? Can you imagine if the internet went offline? What would you do? A lot of people are unaware of this. This is in 2020, so it's a year old. Around 7% of money supply is tangible. The other 93% is non-physical. Wow, that is really scary. The notion really comes from the nature of how banks create money. A lot of people on the internet get very sensationalistic and they say, no, Bitcoin can't grow, it can't absorb the money. That's not actually true. If we start to denominate global debt in Bitcoin or crypto, could be any crypto, there's a lot of money there. If we got into the real estate market, $280 trillion, and that's a year ago, it's gone up a lot since then. There's a few trillion there that we could add in Bitcoin. If we look at global wealth, if a percentage of that $361 nearly trillion last year, global wealth has actually exploded this year. If you think about that being denominated in crypto, wow, there's a few trillion we could add. We're just currently trading about 1.2 trillion odd. Have a look at this. What if we just start doing derivatives in crypto? $585.5 trillion is a low estimate on that. And it really adds up to 1 quadrillion, 1,000 trillion dollars. Anybody who says Bitcoin can't grow from its current market, which is about $1.2 trillion, is really missing the point. There's so much money sloshing around in financial vehicles that they may not have ever heard of. If we go up to global wealth, it's important to understand that a lot of commentators inside the crypto market think from a retail perspective. My background is in finance. I understand the banking sector, the banking system. I've also worked at the top levels of corporates. I understand how corporations think at those top levels. The issue is the total, well, if you like, the very elite people who own so much wealth, they're not relying on stimulus checks. They are thinking very differently, and they will get into crypto, but they will do so from a stealth perspective, under the hood, like exactly what is happening now. It's a scarce commodity, and it's explosive in its potential as well. Let's go to rule 174, the T-cube method, trend, timing, trigger. This is the trend episode. We always do a timing episode later. We can't do our timing before we have our trend. We can't do the trigger, which is buy or sell anything, before we know the timing and we know the trend. If you just pull the trigger, you'll meet rule 666, which is basically you'll get humbled by the market. That means you'll lose a lot of money. So we set everything up inside a very organized structure. To determine the true trend, we look at rule 1112, the KS process, to determine the true trend. We have an understanding about the KS model of institutional price psychology. We know about mathematically protected highs. We know about estimations for the peak of the bull market, the low in the bear market over here. We know quite a few things. Regular viewers will know that we always compare sunlight of the current section of the market that we're in from the halving. These blue lines are halving lines. We compare the sunshine of the bull market to the sunshine of the previous bull market to the sunshine of the previous bull market. We don't cross psychologies, because if we do, we create mathematically inconsistent analysis. That's where rule 181, compare same psychologies, comes from. I'd like to share this on-chain analysis with you. I believe it's probably the single most important thing for us to look at right now. Bitcoin, number of transfers to exchanges, all exchanges. This is using the latest data. Now what we see here, this value is very low at current. Previous cycle peaks always witness a mass of Bitcoin transfers to exchanges. We're not seeing anything like that. We're seeing the opposite. This is accumulation. This is distribution. They're completely different animals. A number of people reached out to me on the community and asked if I would have a look at this particular diagram. They were worried about this spike in exchanges, Bitcoin, all exchanges inflow. I would like to say the best way to understand this is to zoom out. This is how we zoom out. You can see that it is nothing to worry about. Sometimes when you get so close to something, we can't see the wood for the trees. Sometimes it's really important to zoom out. In short, I don't see any issues. Again, comparing same psychologies, comparing this peak to the previous peak. So this is the 2016 halving cycle peak. These are the 2012 halving cycle peaks. We see that this blow off top happens, and you can get a couple of blow off tops. That's more than fine. The bear market is this capitulation event, which is the opposite to a blow off top. You can see this. We're so far away from it right now. People are calling a bear market. I think they're going to get crushed, but it's okay. Like I said, I love bear markets. If we were in one, I would definitely call it out. I don't care what section of the market cycle we're in. It makes no difference to me. I would share it with you if it was anything different than what I'm suggesting the probabilities point to. We can look at Glassnode's data to just reinforce what we're looking at. We can see euphoria here in blue for the 2012 cycle. We go back to the 2016 halving cycle. We see euphoria above this line. We see capitulation in the red here. We don't go too much further back because it becomes statistically insignificant. We can see right at the moment, we're in the yellow zone. We're nowhere near the peak at present, but of course we need a lot of data to confirm that. If we look at the realized cap hodl waves, these fingers, so we've got one here, we need two more. We always go with the trend. That is an absolute law in all markets. You go with the trend. If you go against the trend, you will get humbled. You will meet rule 666, which is a very nasty rule. Let's just have a quick look at the stablecoin supply ratio SSR oscillator. This graph shows us that stablecoins are being deployed into Bitcoin. The last time that happened, the price rose. This is just one more data point. There are many others, such as the hash ribbon. We're not seeing a lot of white space. We typically see white space before a peak and after a peak, before a peak and after a peak, and the hash ribbon get pretty red. We're not really seeing anything like that right now. Rule 193, check the stock markets. Bitcoin is powerful inside the crypto market. No alt can escape Bitcoin's gravity. If you've been in the channel for a little while, you know that is absolutely correct. But you know what? It gets better. Bitcoin also impacts the stock market, especially the ETFs with Bitcoin and the blockchain related companies. The first thing that we need to do is check where we are in the global business cycle. The US, the world's largest economy, is just in early stage recovery. It's not even midway through. It's nowhere close to expansion. News commentators are calling the COVID crisis a reason that exchanges and different parts of the market aren't doing well. Therefore, we track it. We always validate news stories. In the past 24 hours, there's been 502,487 new cases. We will keep on tracking COVID every day to see how things are playing out. The good thing about where the world is right now, we've developed vaccines. We're implementing and immunizing people against COVID. The Delta strain is a particularly nasty strain, but the world is on the ball. They are forging ahead with new discoveries all the time. It is unlikely we'll see the same impacts as when the world didn't have any protection at all from COVID and didn't even know it was coming. When we analyze the stock market, we analyze the US market because it accounts for so much value in terms of stock market value across all the other major countries. I'd like to share Rule 36 with you. News often misleads. I remember when I first started trading decades ago, I would consume news in a crazy way. I would listen to everything. And you know what? What I found was that the news story just reflected current sentiment. I'll explain a bit more. You have to be really careful of the news. They have to say something. With that in mind, I'm starting to collect negative reasons and positive reasons people use to explain current price behavior, current price action. Negative reasons, it's the COVID Delta strain, it's inflation, the potential rate increases, it's tapering, slow economic recovery, slowing demand, below expectations. There's like keywords that they use. Positive reasons, vaccinations, deflation, low rates, like the opposite of inflation, stimulus, opposite of tapering, improved global growth, the opposite of slow, increasing demand, not slowing demand, exceeded expectations, the opposite of below expectations. Just keep that in mind when you're reading the news. You'll see a whole new world. I swear that they just pick the reasons from a bucket and throw them at whatever's happening price-wise in the market. Okay, let's look at the 10-year break-even inflation rate. People are talking about inflation. Let's analyze it. You notice what's happening with Bitcoin here in gold. Inflation is starting to take off. There's a degree of correlation between Bitcoin and inflation. Let's look at the 5-year break-even rate on inflation. It's starting to find support. It's definitely crossed over resistance. I believe that the current price action in Bitcoin is nothing more than a shakeout. I think it will be short-lived. Let's have a look at forward inflation expectation rate. We can see resistance here. I've drawn a fairly tight resistance on this. It's still not above that. Okay, let's have a final look at interest rates. Interest rates, we can see they're under resistance at the moment. Now let's turn to the markets. We're going to basically fly through these things. The NASDAQ 100 futures, we saw price is always moving in a wave, going up and then down, up. Of course it's got to come down at some stage. I just drew a little line in here to give some indication. I believe there's potentially going to be a rotation into cryptos. We saw some divergences previously. Zooming out from the market, quarter-on-quarter earnings are expected across the board to be increasing by around 65.8%. That's from Refinitiv. The Federal Reserve Chairman, Jerome Powell, said there will be no inflation, no tapering. Inflation is existing, but it's deemed to be only temporary. They've got a long way to go and no change in policy stance. That's the most important thing to understand, no change. The Senate Democrats are proposing a $3.5 trillion spending bill. Oil, on the oil side of things, there's an unwinding of long positions. OPEC is increasing crude production by 400,000 barrels per day starting in August of 21. That kind of gives you a bit of a basic overview of the market. Let's have a look at the S&P. It hit this support and bounced. Let's have a look at the Russell. It's underneath support. The Dow Jones hit support and bounced. Facebook, just basically underneath support at the moment. Let's have a look at Amazon. Hit support and bounced. Apple, doing quite well, really. Netflix, at support, retesting. Google, on an upward march. What I've done here is to put quarterly revenue in here and annual revenue down there. You can actually zoom in to these companies and see what they're doing. I just always try to provide more and more information where I can. Of course, you've got the price of Bitcoin in the background. Microsoft on a tear. Nvidia is a new one. I just popped this in because I believe it's quite important to measure this one. If you have any other particularly important overweighted players that you would like me to analyze, please let me know. Just reach out to me. Okay, so we're now looking at Bitcoin. Grayscale Bitcoin Trust, just under that resistance. But it's really interesting to note, Q1 2021, it earned 109.93 million. In 2020, the whole year, 50.34 million. It's doing pretty well. Let's have a look at MicroStrategy. MicroStrategy, we've seen a dip in revenue here. Always good to keep our eye on this. Weakness in the stock price. Galaxy Digital, weakness. Tesla, about the same, slightly lower level of revenue in Q1, but really on track. 2020 was 31.5 billion. There's already 10 billion here and 4 quarters. Okay, let's look at CoinShares physical Bitcoin. It's just behaving just like Grayscale, just like Bitcoin at the moment. When Bitcoin recovers, all of these will recover too. Voyager Digital, done very well. Look at this Q1 2021, 76.53, as opposed to Q4 was only 4.65. Of course, we'd have to do a bit more analysis on that, but that's just showing relative growth, potentially. Purpose Bitcoin ETF, under resistance. Square, hit that support and bounced. We can see Q1 earnings or Q1 revenue 5.06 billion. 2020 annual revenue was 9.5 billion. That's very healthy. Marathon Digital, let's have a look. Showing weakness. Q1 earnings 9.15 million versus 2020 4.36 million. It's all driven by these numbers in the stock market. Let's have a look at Coinbase Global. It's doing pretty well. Q1 1.8 billion, and for the whole of 2020 1.3 billion. I'd say that's a fairly good quarter. Well done, guys. Okay, Bitcoin Group showing weakness here. QBTC, the Bitcoin fund in Canada, also showing weakness. Of course, as Bitcoin shows weakness, these funds will show exactly the same weakness. ARK Innovation ETF doing a bounce, as tech did. ARK Next Generation Internet doing a bounce. Silvergate Capital, we can see the revenue increasing. Q2 2021 up from Q1, 31 million to 43 million roughly. Very good. And the past financial year around 98 million. That's on a tear. Let's look at Hive Blockchain doing a bounce. Riot, they're all basically doing the same thing as we would expect. It's really interesting. Q1 2021 Hive Blockchain, 23 million in revenue. Whole year in 2020, half of that, around 12 million. Doing fairly well. If we look down here at Bitfarms, we're seeing Q1 came in at around 29 million. Annual revenue for the whole of 2020 was 36.5. And Argo Blockchain. Of course, these things will show weakness until Bitcoin repairs itself. Bitcoin will have a disproportional impact. Let's have a look at gold. Gold, flight to safe haven. Let's have a look. Okay, it's basically seeking to test this support line. It's acting particularly weak at the moment. We would have hoped that it would actually bounce up there, but there's a weakness. And we've seen a big weakness in silver recently. Let's have a look at VIX. VIX is declining in terms of the fear index. Let's look at the dollar. It's increasing. A lot of commentators keep on making this assumption that when the dollar is going up, Bitcoin is going in the opposite direction. We've certainly not seen this. Like if you look at it from the 5th of January 2021, when the dollar goes down, Bitcoin goes down. The dollar is going up. Now Bitcoin is going down. But what does this tell us about Bitcoin? Is there latent power? Let's look at the treasury bonds. Okay, we've had a sell-off here because things are improving. This is often a flight to safety. That's why we look at it. We're trying to detect black swans. All this work is very extensive, but it's trying to push you across all sectors to understand pretty much everything. We can see this support was broken and Treasury, 10-year treasuries came up a little. And of course we would expect the same for the 30-year, which we did. Transportation average ETF, it's coming up. Just testing that now resistance once support. Let's have a look at the utilities. Trying to get above that resistance, not doing too well, but it's still a higher low. We'll keep our eye on utilities. The airline index, wow, what a jump. Pretty impressive. Let's have a look at oil. Oil putting in a slight bounce. And let's have a look at light crude. Yeah, been selling off. Oil has been on an absolute tear. Of course, wave up and wave down. Price is always moving in a wave. This is nothing more than just normal price behavior. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos, this research for you, because I want you to have the absolute highest quality, most comprehensive information that you can have. I love to share it. This is always part of what I do. Sharing it out does take some time to put everything together into a coherent story. I hope you've enjoyed it. Please say hi and let me know if you have any questions. Let's go into Ethereum. Really nice to see some green in the market, isn't it? Especially after yesterday. That was a bit of a bloodbath. But if you bought the falling knife, I think you might be sitting rather pretty today. If you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe to YouTube. We also have free groups on Facebook, Twitter of course, and Discord. You're always very, very welcome. And you can reach out to me directly on Twitter. I always do my best. I get a little bit busy, so if I send you a heart or a like or a thumbs up or whatever I send you, it's like, thank you very much. I know you're there. I'm going to get back to you just as soon as I can. I do tend to get a lot of people reaching out, and I love that. Please do so if you would like. Always remember, crypto is volatile. Please prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.